Okay, guys, thanks for joining us here in the charts. This is the Market Beast, Napoleon Macro. All right, let's take a look at the AMC market. We're going to pull up the original lines. We did recently go long. We'll let you guys know how that went. We're also going to end the video out with just 2 lines as a range for the next 3 up to a week in the market here. So hopefully you guys are ready for that. So welcome back, loyal family. If you're new here, we explore price action only. And welcome in all of our new subscribers, guys. Let's go ahead and dive right into the charts here, shall we? So today's August the 10th, 2021, and the previous close of AMC, $31.75, slightly negative 6% for the day. Okay. All right, so welcome back, ASMR, interesting analysis. Here's the original lines. Okay, so that's just something from something else. All right, so one of the things that we've been following, if you're new, is we've been following this very large consolidation range that's been on the chart for some time, $42 up to $63, as the sellers consolidated and broke down to the downside. And right now, the sellers are continuing to follow through with their obligation, and that's evidence showing that the market just made a new low. Now, that doesn't mean that there won't be a turnaround here, because it seems like the market has a pretty bearish sentiment. And just briefly, if you're new, you might not know what I'm talking about, but the 2 weeks here, I need to explain this. I think some were interpreting that we were saying the market would go to like $53 within 2 weeks by like August the 6th, which is already passed. No, guys, we were saying that's a buyer's obligation. That's a difference. After the market actually made a low here at about $29 or $31 and it bounced up and it appeared to be finding support at the $36 level, the buyer's obligation was to break through at $53. I know a lot of you already, you already know that, right? But there's just some, maybe selective hearing, or maybe I didn't say it the right way. I just want to make sure that I'm clear that, yeah, not 2 weeks is going to go to 53. That was a buyer's obligation, and they failed, and as a result, the market is moving lower. Okay, really simple. All right, and the previous level of resistance is still the same, $20. Now, keep in mind, guys, if the market continues lower, which I don't think the market is going to continue lower, but don't enter based on what I think. Okay, I've been pretty wrong lately, actually. We entered the market at about 33. I'll let you guys know how that went. We went long in the market at this red candle here, 33, and it immediately went against us. We're like, oh, man, all right. And then when the market pushed up on this daily candle, we did exit our positions at, I think it was like a 15% loss. So we did lose money on those contracts. You know how every other person, they never lose money or they always break even, and Napoleon is the only one who actually loses money. So yeah, we did lose money on those contracts. We don't show the accounts, but we do keep it totally transparent if we win or we lose in the markets. Okay, so yeah, that's how that play went. So yeah, as I was explaining, the previous level of resistance is going to be $20. But if you guys notice, there's no real structural. There's nothing structurally sound about the $20 range. There's only been actually 2 touch points of rejection here near, what is that? I can't see the date, pardon me there. It's January the 27th, and then the breakthrough on this green candle at about May the 27th. So not really much activity. The true activity actually took place below $20, but I'm not going to start saying bearish targets. We're going to get those interesting comments in the comment section. So let's just keep it at that, $20. But let's just keep, actually, let's pull up the range that I said that we would pull up before we close out the video. Thank you for your patience. So right about there, that's the buyer's obligation. This video is not a prediction saying that it's going to go in either direction, but I do want to give you the range and the levels to understand the relationship between the buyers and sellers and how they're obligated to follow through in either direction. Okay, so the red line obviously represents the seller's obligation. They must push the price lower in order to make a new low. As again, we did show you the $42 up to $63 range is a seller's consolidation range for now. It can change, but for now it's obvious they broke down to the downside, so that range will be owned by the sellers for now. The sellers are making lower lows, only just 2 lower lows here at about July 15th, and then a new low over here. Okay, so let's just get to the range and close it out. I just want to make sure I'm technically speaking right, so that we're all clear. Okay, all right, so the red line is going to be $29.66. Yes, I realize it wicked lower than that, but I focus on the candle's bodies. That is the seller's obligation to push a price lower than that level. Again, 3 market days up to a week. Okay, so 3 to 5 market days. Let's see if that level can hold. And the buyers, you guys got to get the price above 33.33. Okay, so that would be the level. So in other words, because I know some people may not understand how to interpret this information. I want to make sure I get across to everyone, guys. So if you're new to technical analysis and you're trying to figure out, okay, dude, why are you giving me these lines? It's useless. It makes no sense. So when the markets open, right, tomorrow or anytime this week, and you're noticing price fluctuations like near $33.33, that just simply means the buyers are trying to get back above, like, think of it as like kind of stepping up to the plate to, to swing at a bat or something. And then, of course, when you're standing at that plate above the level at the green line there at about $33.33, you're going to take a swing at it, and you're going to push that price to the upside. Can push it as high as you possibly can, but your obligation is to make a new high, okay? Because that's the name of the game. That's why we go over support, resistance, and patterns, and higher highs and higher lows for an uptrend. So the most recent high is going to be right here at about $43. And I know there was a gentleman in the comment section saying, dude, you're giving all this hopium or something like that. No, guys, I'm telling you, this is the obligation from the buyers. They must push the price higher than this level in order to get out of the downtrend, okay? Right now, it's in a short-term downtrend, but in an overall uptrend, as long as the price is above $20, I'm going to continue saying that, all right? So just from the daily candles, if you look at the higher time frames, it just looks like an explosion out of a consolidation range, but the daily candles is suggesting an uptrend, overall uptrend, okay? And yeah, so remember, to make a new high, that is a buyer's obligation. Did I go over that level? $42, guys, $42.50, okay, approximately. And the sellers, the path of least resistance right now is going to be to the downside. The sellers must make a new low lower than, we've already went over this, guys, the red line at about $29.76. So again, just if you're watching fluctuations in the market and you see it making a new low, just understand that the sellers, they're following through. They really want to, close those positions, lower positions down there. If you see it make a new low, not generally, but in some cases, when you break down to make a new low, the market, like, there's like a immediate, like a knee-jerk reaction where it actually makes it bounces, and of course the buyers just kind of step up to the plate, and then of course they push a price as high as they possibly can and potentially make a lower high, only to make that a dead cat bounce, if you want to call it that, or just a bullish counter move in a bearish trajectory, only to just continue the momentum to the downside, okay? But you have the range, okay? We'll close out the video. 29.66 up, and that's the seller's obligation level to break below to continue the momentum to the downside. The buyers really need to step up. Got to get the price above 33.33, okay? Within the next 3 days up to a week to truly show strength, or at least at the worst case scenario, to hold this line, the red line, for about 3 days to at least have an opportunity to attempt to push the price to the upside. All right, 33.33, guys. Okay, so hopefully this information is useful. I truly, let me know in the comment section, please. Is this information helping someone? Because I really want to, like, focus on, saying stuff that's really helping you guys, trying to, pull up those charts and understanding the behavior between the buyers and sellers, whether this is useful on this stock or not, but, just to kind of have an idea of the relationship between the buyers and sellers when they just need to make a new low, the sellers, and the buyers just need to make a new high, to reverse the trend. It's just really simple, actually, really, really simple. All right, so that's it in the video. Hopefully you enjoyed that. So go ahead and leave an appropriate thumb just below the video if you enjoyed the content, and leave a comment so that the YouTube algorithm can promote the video. Also, if you're new, we covered the alternative markets if you're into Bitcoin and altcoins. So kindly subscribe, hit the bell, and we'll send you that information when it is available. Guys, I appreciate your time for stopping out. Execute your strategies. Remember, keep that positive energy flowing. Always be kind. We'll talk soon, and bye for now.